If you operate an IVF clinic in Australia, the financial infrastructure required to deliver fertility services at the standard patients expect is substantial. Laboratory equipment, incubators, cryogenic storage systems, ultrasound technology, theatre facilities, and the clinical environment required for a licensed ALT provider all represent significant capital investment. The regulatory requirements alone create a baseline cost structure that is unique to this sector, and staying at the forefront of technology is not optional when patient outcomes are the product. Here is what is available to IVF clinics, how it works, and what you can realistically borrow. Fertility clinics occupy an unusual position in the healthcare lending market. Revenue is a mix of Medicare rebated cycles, private billing, and increasingly international patients. Patient commitment to proceeding is high given the nature of the treatment, and the specialist regulatory environment creates meaningful barriers to competition. Lenders who understand the sector recognize these characteristics and are better positioned to structure appropriate finance than generalist lenders. Equipment finance is the primary structure for IVF clinics investing in laboratory equipment, incubators, cryogenic storage, ultrasound systems, and other high-value clinical technology. The equipment is the security, keeping your property free. Rates are lower than unsecured alternatives, and the tax treatment is often favorable. For clinics upgrading to current generation laboratory technology or expanding cryogenic storage capacity, equipment finance handles these purchases without consuming operational cash flow. For clinic establishment, major fit outs, or acquiring an existing practice, secured business loans using property or significant business assets as collateral provide access to larger facilities at meaningfully lower interest rates. The scale of investment required to establish or substantially expand an IVF clinic typically requires secured finance. Specialist healthcare lenders understand the revenue ramp-up profile of a fertility clinic and can structure facilities accordingly. Unsecured business loans provide fast access to working capital for operational needs, marketing, staffing, or bridging cash flow gaps. You can borrow between $10,000 and $500,000 based on clinic revenue and bank statements, with approval possible in 24 to 48 hours. A business line of credit is useful for managing cash flow between billing cycles, funding marketing investment ahead of expected patient volume, or managing variable operational costs across busy and quieter periods. How much you can borrow depends on your clinic revenue, trading history, and the specific purpose of the finance. Established clinics with strong cycle volumes and clean financials access competitive terms from specialist healthcare lenders. The quality of your financial records and the clarity of your revenue history are the most important factors in accessing the best available terms. Applications take under 20 minutes with most specialist healthcare and non-bank lenders. A commercial finance broker with medical sector experience can identify the right lenders for your clinic profile. Brokers are paid by the lender on settlement and do not charge you directly. Use the free business loan finder at Reliable Business Tools to find which loan type suits your IVF clinic. 6 questions, a clear recommendation, no credit check and no obligation.